I think we should switch gears into rents, because there's some new headlines that have come out in terms of rents and what rents are doing. And I'm going to put some charts here on the screen where rents have been trending upwards for quite some time, and we're starting to see that trend is changing. But again, these are national numbers. These are GTA numbers. These are Vancouver numbers or Greater Vancouver area numbers. The point is that these massive regions, and the country is the biggest region, really mislead a lot of real estate investors in terms of what's actually happening with rents. And we could solve this issue with the DiVault, and we have solved this issue with the DiVault. But tell us what the macro charts is showing across the country, Patrick.
Well, when we look at rents, first and foremost, when they show these charts and when they make these headlines, investors aside, this is what creates controversy with tenants and the negativity around rental housing providers. They're getting rich. They're just raising rents. It's like there's no method to the madness. They just keep taking advantage of us. So this is all part of that game. It seems that, and of course it plays perfectly into the politicians, because they don't have to take responsibility for the mess they've created in the housing market, in immigration. They have to take no responsibility for it. They can blame us. So when they show these charts and they show, look how much rents have come up. It's true, by the way, but let's face it, there's a reality in behind that says, interest rates have gone up. The cost of actually doing business as a rental housing provider has gone up. Insurance has gone up. Let's face it. But these headlines really drive the controversy, if you will. And this is what the government will do, and federal, municipal, provincial. This is where politics over policy comes into play. Long story, but that's part of it. Now, having said all of that, rents have come up. And if you look at the rents overall, and you basically break it down again by province, even by municipality, you see that most of them have bumped up against that ceiling. It's like, okay, we've hit the ceiling of limitation of what people are willing to pay.
I've never really liked paying bills.
Having said that, rental demand is going nowhere anytime soon. People are going to continue to rent. And if anything, aside from the immigration, JG, affordability and the ability to get a mortgage, have a down payment, get that financing has shifted many people who would be first-time buyers to the sidelines. They either can't buy or they're afraid to buy, and they want to wait for the market to crash because we're in a bubble. So what does that mean for us as rental housing providers? We're going to have a steady stream of demand for our units.
Now let's flip over to DiVault, folks, so we can show you exactly how this changes when you look at region by region and you look at the individual rents. And by the way, if you're asking yourself, how do I get involved in DiVault? How do I get this platform? How do I join? Go to di-vault.com and you will be able to actually get to one of our info sessions so we can show you how to use the platform. So check that out, di-vault.com. But if I click on this layer here of rent change, look what happens. Look at this. This is fascinating, Patrick. Here we have this sweeping statement saying rents are going up. Rents are going up everywhere. No, they're not. Look at this actual chart where you can see the green regions. Rents have gone up. By the way, in the last 30 days, rents have gone up in the last 30 days. The red areas are where prices have gone down in the last 30 days, and there are plenty of them. And the yellow areas are places that have been stable for the last 30 days in terms of rents. Now, one of my favorite tools of DiVault is another layer called the upside rent potential. This, Patrick, uses AI technology as well as machine learning to predict where rents are going in the next 30, 60, 90 days. And check this out. If I click on that layer, you can see certain markets. Look, certain markets are red, which means they do expect that rents are going to be going down in the next 30, 60, 90 days. Now, let me just clarify something. Does that mean it's because it's a bad rental market? Absolutely not. The reason this is happening is because those markets are just happen to be at the peak of where they can be for rents for now. And if I look at Peterborough right now, Patrick, you can see that it's red, which means in the next 30, 60, 90 days, we expect rents to come down a little bit. And I'm actually seeing that in the market right here, right now. And the reason is because we've had a big run up in the last 60, 90 days. Rents have shot up quite significantly here. So now we're just taking a pause. We're just taking a breath. Things are going to level off. Things are going to cool off a little bit. And that's okay. There's nothing wrong with that. What's important as a real estate investor is to know what's going to happen and to be prepared for it, Patrick. But with tools like this, you don't have to rely on stupid headlines that make statements that are irrelevant to real estate investors. You can actually look at your actual market to see what's actually happening and then make business decisions based on that.
Yeah, and or listen to talking heads who are trying to make the Toronto market relate to the Calgary market. Anyways, I'll get over that. But something that we need to clarify here too, JG, is that the red shows that rents have come down a little bit. But again, it's not like this epic crash of rents. They're not coming down several $100s a month. The detail that the technology picks up on is going to be, maybe $50, maybe $100. The point is that rents have come off a little bit in that particular area. And I think at some point, we have to really speak to what's going on economically on a global macro scale, JG. And I don't know if this is the right time to insert this, but I think we need to shine a light on the, potentially the impending, world war, if you want to go that dark. But listen, there's a lot of things that are happening now, given what's, with what's happening with Hamas and Israel. And, we then look at all of a sudden Ukraine and Russia is off the map in terms of conversation. But there's a lot of global macro issues happening that is going to impact us. JG, I told you, and I've said it many times, I think oil prices now with this happening are going to go through the freaking roof. So what does that mean for us? When it comes to the cost of living, when it comes to the rate of inflation, as oil goes up, so will inflation. I think we're at a huge risk there of seeing big inflation. Again, what does that mean for us as investors? It means that we're going to see some rising costs. We're also going to have rising rents because of affordability and the inflation and the discretionary income that people are lacking to buy a piece of real estate. So kind of trying to condense it all, but I think it's a good point to insert here.
Yeah, for sure. And what's interesting as a real estate investor, for those of you listening, is you have to look at, number one, go look at the data, go look at what's actually happening in your market, and then make some decisions. Patrick, I think you said it really well, which is we don't expect rental demand, for it to fall off the map anytime soon because of so much immigration coming into the country. And we expect that's going to continue. That being said, I can tell you firsthand, I'm experiencing this where people are definitely more reluctant to move. People are just like burying the hatchets down right now. They're thinking, you know what, I'm just going to stay where I am. I'll look at moving in a year or in 2 years. I'm good. I'm okay.
And I am telling you, I'm not going.
The moves we saw during COVID where people were moving out of town, where people were really pushing to move and they wanted a better space. We're kind of getting almost the opposite of that right now, Patrick, where people are just saying, listen, there's enough uncertainty in this world right now. I'm just going to wait and I'm just going to see how it goes. I'll reassess this in 6 months or 12 months. And we're seeing a lot of renters that are very interested in, listen, just let's just renew the lease. We're just going to stay where we are. We're okay with that. And that's fantastic. That's also stable. That's stability for us real estate investors. I don't think it's necessarily a bad thing, especially when you couple that with a lot of incoming rental demand. I think it's good, and prices eventually will continue to rise on rents. And of course, we all want them to rise more to keep up with the crazy interest rates that a lot of people are having to tackle with. But the point remains that you have a lot of demand for rentals, and that's a great thing for us real estate investors.
100%. And JG, let's just say it again so that we are on record. We're not suggesting to investors to just throw money into the real estate market, and see what sticks. This is being strategic. It is being thoughtful. It is being really clear on what the strategies and tactics you're going to use. Buying for cash flow, understanding that there's lots of deals out there. You don't need to rush into anything, and then tapping into technology like DiVault to find those deals to make sure that you're buying in the right market in terms of rental demand. I mean, these are all things that we bring together. I think the big thing here is that many rental housing providers don't have the experience. They don't have the technology. They want it to be easier. And listen, this makes it far, far easier, but you go through it to create that long-term kind of future financial success. You go through this process. And right now, in all the chaos, when everybody's running for the hills, it's those that kind of keep grinding it out that are going to do exceptionally well.
Folks, check out di-vault.com. Come to one of those info sessions. Get involved in this technology. You'll be blown away by how it's going to save you a ton of time. Things that used to take you weeks or months to do, you can now do in minutes, thanks to AI, thanks to machine learning, thanks to predictive analytics, thanks to all of this technology. It's there to help you. It's there to serve you. So check that out, di-vault.com. And that's a bit of that's our regionality segment of this, as well as we threw in some rents there and to show you how things are changing. So that was a great segment. Thanks, Pat. So the next segment, Patrick, I want to cover before we get to short-term rentals, because there's a ton to talk about short-term rentals. Now that we've covered some market stats, some rents, we've talked a little bit about CPI, and let's bring in that conversation about CPI a little bit more. But I think that, Patrick, it is time for you to make a good old-fashioned Patrick prediction. But what do you think is going to happen? Are they going to raise interest rates next week? What is going to happen?
I mean, never say never. I'd be so surprised if Bank of Canada raises rates. They don't have a reason to at this point. I mean, certainly inflation has come down, 3 to 3.8 from 4 point whatever it was, 4.2 or 4.6. I don't remember. So inflation has come back down. What's interesting.
So the numbers are, it's 3.67 from 4.29 is where it's at right now.
So it goes back to what we said several times. The Bank of Canada needs to pause, let all these lags work through the system. And when we look at that 3.67, by the way, over 30% of it is of that CPI number is the interest payment on mortgage. So if you take that out of there, the next thing you know, you're already down to about 3.2%. And if you look at rents and realize that rents are up, a lot of the rents are up because of the cost of actually holding that property by the rental housing provider. I mean, we would be at probably 3%. And so it makes no sense for them to raise it. But, listen, I don't know that the Bank of Canada makes sense. So, and our, finance, Chrystia Freeland, makes even less sense. So I say I'd be shocked if they do, but never say never.
Got it. So, and I'm in your camp, Patrick, and I like how you set that up, which is what they should do and what they will do. Well, that's maybe two different things there, but I think everyone's kind of expecting there not to be a rate hike. So far, all the stats have really come out in the direction of pausing, which is great. I definitely, no doubt. I think the entire real estate market is going to be thrilled when there's a rate pause, because everyone's just looking for that stability right now. Patrick, there's a lot of investors with a lot of money in the market, and everyone's on edge, especially with the other socioeconomic issues that are happening in the world. There's definitely a lot of people on edge, and as a result of that, we need some stability. And I'm hoping it comes in the form of interest rate pause. And hey, listen, I'm going to go one step further because I'm a bit of a contrarian, Patrick. Whatever you say, I like to say the opposite. So I'm going to say that they're not going to pause. They're going to cut. That's what I'm saying. That's my JG prediction.
Okay, so I get that's a little tongue-in-cheek, and that would be interesting if they do. I think it's too early, but I will make a bolder prediction, and I think interest rates are going to come down sooner than anticipated. I think a lot of people were anticipating 2024 a little bit of a little bit of a cut. I think those cuts are going to come sooner and even more, given back to what's happening on a global scale. I think they're going to actually throw more liquidity into the system and bring rates down. That's just my view.
Are you ready to put a date on it? Are you saying is a Patrick prediction that they're going to cut rates before the end of the year? Is that what I just heard?
No, not before the end of 2023, but definitely they're going to cut before the middle of 2024. How's that? First quarter
2024, Patrick prediction, they're going to cut. That's what I just heard.
Okay, sure. I'll take that. I can make that make sense. First quarter, and again, probably in the first half.
First quarter, first half. 2 cuts. I just heard another Patrick prediction. Yeah. 2 cuts in the first half.
I'll be brave. I'm willing to put it out there.
I love it. That's great. Perfect. Well, listen, I'm banking on a cut next week. I hope that would be awesome because I got a property on the market.
You're banking on it? Okay, JG, you're banking on it? Really? Okay.
Listen, I just put a property on the market today that I need to move, and I got to get a really good price on it because we did a flip, and we've always said, Patrick, doing flips in this kind of market is definitely tough. And this property, luckily, we got a great price on the property, and it left the margin a little thin. So I got to get my price on it, and a rate cut would definitely help me. So I'm going to the bank with a rate cut.
Yeah. Well, listen, you're a highly trained professional. I'm sure you'll do fine. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.